Welcome to the deep dive. Going deep on something every trader needs to master, but, sometimes it gets overlooked.
Oh, absolutely.
Monitoring and presenting performance.
It's really key.
It really is.
Yeah.
Imagine, explaining your every trading decision with total confidence.
Yeah.
Whether you're talking to an investor or just, to that little voice in your head when you start doubting yourself.
Yeah.
That's the power we're unlocking today.
It's where even, surprisingly, some experienced traders, they have blind spots.
They do.
Yeah.
And thankfully, we've got some fascinating material to guide us.
Yeah.
We're diving into PDF slides and get this translated audio transcripts from a lecture, I think, all about this topic. The transcripts were originally in Thai.
Oh, wow.
Which I just find so cool. It just shows you how universal these challenges are in the trading world.
It highlights that, traders everywhere struggle with these same questions.
Okay, let's unpack this. The first thing that jumps out from the material is the emphasis on monitoring.
Oh,
They're not just talking about, glancing at your P&L.
Right.
They're going deep.
It's way more than that.
Yeah. So
think of it like this. If you were training for a marathon, you wouldn't just, run blindly, would you?
Well,
You'd track your pace and your distance, heart rate,
right.
all those metrics that help you understand how your body's performing, monitoring your trading systems. It's the same idea.
Yeah.
It's about getting that granular data that shows you how your system is actually working.
So it's not just about, are you making money?
Right.
It's about understanding why you're making or losing money.
Yeah. And the source material gives a really comprehensive list of what to monitor. But I think let's go beyond just listing them.
Yeah, let's break it down.
Yeah, let's understand why these metrics matter. Starting with risk assessment. This isn't something you just do once at the beginning.
Right.
It's ongoing.
Yeah, because your risk can change as your positions evolve.
Exactly.
Especially if you're in, volatile markets.
Oh, yeah, especially.
Or using leveraged instrument.
Right. And the materials also highlight execution.
Oh, interesting.
Monitoring your execution.
Okay.
I remember when I first started tracking slippage, I was genuinely shocked at how much it was eating into my profits.
Oh, wow.
It was a real eye-opener for me, and I had to rethink how I was placing my orders.
I can totally relate to that. It's easy to overlook those, seemingly small execution costs until you start actually measuring them.
You don't realize.
And then you're like, wait a minute.
Yeah.
Those fractions of a cent really add up.
Exactly.
Yeah.
And this is where tracking things like slippage and missed trades becomes so important, because if you're constantly getting worse fills than your backtests, it could point to a flaw in your system logic.
Right.
Or maybe how you've coded your execution algorithm.
Oh, okay.
Or even that you need to adjust your order types.
So monitoring execution isn't just about minimizing costs.
Right.
It's also about...
It's about making sure your system is working.
Validating that it's behaving the way you designed it to.
Right.
Fascinating.
And then you move up to the portfolio level.
Okay.
You're monitoring your equity, your drawdown, your projected returns, and all the classic metrics.
So those classic, overall...
Yeah, it's like checking the vital sign of your whole trading operation.
Right. And what about position level details?
Yeah.
What kind of insights can we get from monitoring those?
This is where you really get into the nuts and bolts of how your positions are behaving.
Okay.
You want to track things like your stop losses, the volatility of each position, and how you're allocated across different sectors.
Okay, so how those allocations are changing over time.
Exactly. This can reveal some hidden risks.
Interesting.
Or opportunities.
That you wouldn't see otherwise.
That you might miss if you're just looking at the portfolio.
As a whole.
As a whole.
Got it. Okay, so we're monitoring risk.
Right.
We're monitoring execution, portfolio metrics.
Yeah.
Position details.
Yeah.
It's a lot to keep track of.
It is.
Anything else we need to be watching?
One more crucial area, market conditions.
Oh, right, of course.
You need to constantly evaluate how your chosen analysis framework is holding up.
You mean things like the benchmarks that I'm using to,
exactly.
measure my system's performance?
Yeah. But the materials also mention something really interesting called synthesized benchmarks.
Okay, now that sounds...
It's a little bit, yeah.
What exactly?
Imagine a video game where you adjust the difficulty.
Okay.
A synthesized benchmark is kind of like that. You're taking a real benchmark,
Right.
like the SET index, but you're adjusting it.
Okay.
Maybe you want to see how your system compares to the SET index, but a limited drawdown.
Oh, so it's like a more tailored...
It gives you a more realistic target.
Okay.
Especially if your system is designed to manage risk more tightly.
Interesting. So it's not just about beating the market. It's about beating a version of the market that reflects your system's specific risk parameters.
Exactly.
Brilliant.
And all of this monitoring, it can seem overwhelming, especially when you're first starting out.
Right.
Don't try to analyze everything at once.
Okay.
Start by monitoring everything.
Right.
And then as you gain experience, you can prioritize the metrics that are most relevant to you.
I love that approach.
Yeah, it's all about...
It's like, say, knowledge is power.
Right.
Okay, so we're diligently tracking all this data.
Yeah.
What do we do with it? How do we make sense of it all?
That's where benchmarking and comparison come in.
Okay.
The materials emphasize comparing your system's actual performance against two things: your backtest results and relevant benchmarks.
So we're putting those numbers into context.
Exactly.
Yeah.
You want to see how your system is performing relative to what you expected based on your backtesting.
Yeah.
And you also want to see how it stacks up against the broader market or maybe a synthesized benchmark.
Yeah. So if your system is crushing it compared to your backtest, but it's lagging behind the market, that tells you something.
Exactly. And to do this, effectively, you need to dive into your backtest data. Look at averages, medians, even percentiles.
Okay.
To understand how your system has performed
in the past.
This helps you establish realistic expectations and spot any deviations from the norm.
The speaker even introduces their own personal scoring system.
Yes, the PAGE system.
Okay, tell me about this PAGE system.
It stands for poor, average, good, excellent.
So simple.
Oh, I know.
Easy to remember.
It's such an elegant...
I love systems like that.
Yeah.
Okay, so we know what to monitor. We know how to benchmark and compare our results.
Right.
But when is the best time to actually do this monitoring?
That's where it gets interesting.
When should we be checking these numbers?
Because the materials offer a few specific time frames.
Okay.
And it gets personal.
Hit us with those time frames.
Well, you've got the obvious calendar periods.
Okay.
The current month, quarter, year to date.
Okay, right.
But then they get more granular.
Oh, interesting.
They suggest monitoring based on the number of bars or trading days.
Okay.
There's even a reference to Dr. Elder's 6% rule here, which is,
Yeah, that's a classic.
It's a classic risk management concept.
Yeah, it basically says you should never risk more than 6%.
Yeah, 6% of your account on any single trade.
Right. Makes sense. How does that relate to monitoring timeframes?
Well, think of it this way.
Okay.
If you hit that 6% risk threshold, it might be a good time to pause.
Okay.
Reassess your system, and maybe adjust your position sizing.
Okay.
But the real aha moment is this: the N in all these time frames.
Right.
The number of days, trades, whatever, shouldn't be arbitrary.
Okay.
It should be derived from your backtest results.
So we're not just using some random number of days or trades.
Exactly.
We're using numbers that are specifically meaningful for our system.
Yeah, based on its historical performance.
Based on its historical performance.
Exactly. That's what makes it so powerful.
Okay.
For example, if your backtesting revealed that your system tends to experience a drawdown every 20 trades or so, you'll know to be extra vigilant.
During that 20 trade cycle.
Exactly.
Oh, I see. So if my backtesting showed some recurring pattern in, say, the last 60 trading days, I could use that as my monitoring time frame.
Precisely.
Okay.
And maybe you notice that after a series of 10 winning trades, your system tends to have a losing streak.
Okay.
That's valuable information because it can help you manage your expectations and potentially even adjust your position sizing.
Got it. So we're customizing our monitoring process to the DNA of our system.
Exactly.
This is mind-blowing. Okay, so we've covered the what, the how, and the when of monitoring.
Right.
But the materials don't stop there.
No, they don't.
They transition into this really interesting section on the challenge of presentation. Why is that so important?
Because even if you're diligently collecting all this data and analyzing it, if you can't present it effectively, it's almost useless.
It's got to be clear.
You need to be able to communicate it.
Yeah, it's got to be concise.
In a way that's clear, concise.
Compelling.
Compelling. Yes.
Because, let's face it, nobody wants to wade through like a 50-page spreadsheet.
Nobody has time for that.
Of raw data.
No.
Attention spans are precious.
They are.
I can totally relate to that feeling of like...
Information overload.
Information overload. It's like you're trying to drink from a fire hose.
Yeah.
You just end up overwhelmed.
And confused.
With filter.
The materials actually use this phrase, attention is a scarce resource.
Oh, I love that.
And that's not just true for the person you're presenting to.
Right.
It's true for you, too.
That's so true. The speaker even tells this story.
Yeah, about building a system that required daily monitoring.
Oh, wow.
Just because of
the presentation.
How the information was presented.
Wow, so they were creating...
unnecessary work for themselves.
They were making themselves a data robot.
Right. They felt like a data robot.
Instead of a trader. That's a classic case of letting the data drive you.
Instead of the other way around? Exactly.
Okay, so how do we avoid that trap?
The materials have some fantastic recommendations, starting with the structure of your presentation.
Okay, so how you structure the whole thing.
They advocate for a tiered approach, beginning with a one-page executive summary.
So it's like the Cliff's Notes of your system's performance.
It's the need to know.
Yeah.
For anyone who wants a quick snapshot.
Okay, and then if they want to delve deeper?
If they want more, they can move into the 2 to 3 page overview.
Okay, and that gives a bit more detail.
Right. And for the truly curious, there's the detailed section.
And that's where you get into like the
nitty-gritty.
The nitty-gritty.
Yeah.
And then you have all the raw data available.
You have the data.
Yeah.
But you don't necessarily have to present it.
Right, unless someone specifically asks for it.
Unless they want it.
It's about giving people the right level of information.
Exactly.
Yeah, I like that.
Based on their needs and their interest.
Okay, so structure is key. But what about the format? Does the source material touch on that?
Absolutely. They recommend using a variety of formats to make the data more engaging and digestible.
Like, give me an example.
I get dashboards.
Okay.
Graphs, tables.
It's the visual aids that help people.
Yes, that help people.
Quickly grasp what's going on.
Quickly grasp it.
And they emphasize consistency.
Oh, yes. Okay. Consistency is key.
With like your font sizes.
Colors.
Placement. Everything. That makes sense. Because when things are visually consistent, it's so much easier to follow along.
To process the information.
Yeah, it's like a well-designed website.
Yes.
Everything has its place. It's easy to navigate.
And they're big on color coding.
Oh, color coding is great.
Oh, yeah.
Because it makes reports so much more scannable.
It helps you see what's doing well.
What needs attention.
And what needs work.
What's their specific advice?
They love using green for positive data.
Okay.
And red for negative data.
I mean, that's simple, right? Intuitive.
Simple, intuitive.
Everybody gets it.
Someone understands.
Green means go. I love that. It's like a traffic light for your trading performance.
Exactly.
Okay. Any other like expert level presentation tips from the material?
One more that I think is crucial.
Yeah.
Present yourself in the report.
What do you mean by that?
Don't just be a data robot, spitting out numbers.
Right.
Offer your analysis, your insights.
Put your own
commentary.
Yeah, like your own spin on it, basically.
Show that you're thinking about what the data means.
Right.
And you're not afraid to share your conclusions.
I love that. Because it adds so much value, right?
It does.
It shows you're engaged.
It shows you're thinking critically.
You're not just blindly following the numbers.
Exactly.
Right.
It transforms your report from just data points into a story.
Right, like a narrative.
About your system, about your understanding of the markets, and your unique approach.
I love that.
Yeah.
Okay, so we've covered, like, what to present, how to present it, and why it matters.
Right.
But now...
you come to the final question.
The big question.
When to present these reports.
Yeah, when to actually present them.
And here's where things get really personal.
Good.
Because the answer depends on your system, your trading style, even your personal schedule.
So there's no one size fits all.
No.
So if my system doesn't require daily adjustments... I shouldn't feel pressured to create daily reports.
The speaker is actually quite adamant about this.
Oh, are they?
They say avoid daily reporting.
Okay.
Unless you're a full-time intraday trader.
Which makes total sense.
Yeah.
Because if your system doesn't demand that level of like granular monitoring.
Granular monitoring.
Why subject yourself to it?
Exactly.
We've talked about this before. Attention is a
scarce resource.
Scarce resource.
It is.
They actually recommend...
They recommend backtesting your presentation frequency.
Oh, that's interesting.
Just like you backtest your training strategy.
Okay, so
figure out
what cadence.
What cadence actually adds value.
Adds value.
Don't just do it out of habit.
Exactly.
It says you think you should.
I've never thought about it that way.
Mm-hmm.
Okay, but what about
those who
do need to report daily?
They're big on doing it first thing in the morning, dawn, or shortly after.
Wow.
When they're the freshest, most focused.
So they're like up at the crack of dawn.
They are.
Doing their reports.
They are.
Before the day gets going.
Before the distractions.
That's dedication. I'm not sure I'm ready to join the Dawn Patrol just yet.
We all have our own rhythms.
The key is to find what works for you.
Exactly.
But there's one more.
Yeah, there's one more little detail from the audio that I found both hilarious and insightful.
Right.
You remember the part where the speaker is ranting about having to present to basically like a buy and hold investor?
Oh my gosh.
With a super long term.
They were so frustrated.
Oh, they were.
Because they put so much effort into building this sophisticated system.
With all these
detailed daily reports. And the person's like, yeah, but what's my annual return?
Exactly.
It's hilarious.
It perfectly highlights
it does. Audience awareness.
Know your audience.
Know your audience.
Tailor your presentation to them.
To their needs, their level of understanding.
Don't overwhelm a buy and hold investor with intraday charts.
No.
It's not going to be helpful.
It's not.
But the fact that they don't specify an audience...
Mm-hmm.
It got me thinking, what if the most important audience, what is ourselves?
That's a good question.
What if the goal of all this monitoring and reporting is to deepen our own understanding of our trading, to hold ourselves accountable, to create a legacy of knowledge that we can draw on?
Like building a personal trading encyclopedia.
That's that.
Filled with insights, lessons learned.
And a record of your evolution as a trader.
Exactly. It's about using data, not just to improve our systems.
But to improve
ourselves. To become more disciplined, more analytical.
More
aware of our strengths and weaknesses.
It's about embracing the journey of continuous learning.
That's a beautiful thought to carry with us as we wrap up this part of the deep dive.
Yeah, and a perfect segue into the next section.
Where
we explore some practical strategies.
We're putting all this into action.
Exactly.
Stay tuned. Welcome back to the deep dive. Before the break, we were talking about how important it is to know your audience.
Yeah.
When it comes to presenting your trading system's performance.
And how even a sophisticated system can completely fall flat if it doesn't resonate with.
Yeah, if the presentation doesn't connect with who you're talking to.
Right. It's like
trying to explain astrophysics.
Yeah.
To a toddler.
You got to speak their language.
Yeah,
focus on what matters to them.
Exactly. And that got me thinking about the bigger picture.
Yeah.
Why are we putting so much effort into this whole monitoring and presenting our trading performance?
Yeah. What's the goal?
Yeah. What's the
like the ultimate goal?
That's a question that's kind of lurking.
Yeah.
In the background.
In the background of the source material. Yeah.
They're giving us all these great tips on what to monitor, how to benchmark, how to present, but they don't explicitly say why.
They don't really say why it's so important.
Yeah. So let's break it down.
Okay.
Why? Why should we care about all this? What are some of the compelling reasons for taking this this data-driven approach?
Yeah, what's in it for us?
To trading. Yeah, what's in it for us?
Well, for me, the first thing that comes to mind is accountability. Accountability.
Whether you're trading for yourself or managing funds for others or even sharing your results with, friends.
Yeah.
Having well-structured performance reports really forces you to be accountable for your decisions.
Yeah.
Your outcomes.
It's like having a financial fitness tracker.
Exactly.
But for your trading system.
But for your trading,
right.
It keeps you honest with yourself.
It keeps you honest.
About how you're doing.
About how well, or maybe how not so well you're actually doing.
And honesty is crucial for
for growth.
For growth.
Right.
If you're not...
Whether you're trading or training for a marathon, if you're not tracking accurately,
Yeah.
you can't improve.
You can't get better.
Right. And this ties into another reason
Okay.
for all this monitoring and reporting.
Okay.
Justification.
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 Okay, tell me more.
Think about it.
Right.
If you're ever asked to explain your trading decisions,
Right.
whether it's to,
A skeptical friend?
to a skeptical friend, a potential investor,
Right.
even to yourself.
Yeah, those moments of doubt.
In those moments of doubt.
When you're like, ooh, what was I thinking?
Right.
Yeah.
Having solid performance reports can really provide justification.
Like proof, evidence.
It's like having receipts.
Receipts. I love that. Okay.
To back up your decisions, you can point to,
specific metrics,
charts, your analysis.
All that good stuff.
To show why you took those trades.
Right. And how your systems performed.
In
different market conditions.
Under different.
Whether your approach is actually working. That level of transparency is key.
It's key, especially if you're trying to build trust.
Especially if you're dealing with,
Right.
a potential investor.
Or even
just a friend who's like,
Yeah.
hey, how's the trading going?
Right.
Yeah.
It can also be valuable for yourself.
Yeah, that's a good point.
When you have that data to back up your decisions, it boosts your confidence, helps you stay disciplined.
Especially when the market gets crazy. Yeah.
Yeah.
Speaking of staying disciplined, another benefit is optimization.
Optimization.
The
never-ending quest.
The never-ending quest to, squeeze every last bit of performance.
Yeah, to squeeze every last.
Out of our systems.
Right. How does monitoring and reporting?
Yeah, how does all this help with that?
Well, as we talked about before,
Yeah.
monitoring helps you spot patterns.
Right.
Identify areas for improvement.
Whoa.
Refine your approach. Okay.
But by presenting it
Yeah.
in a structured format,
Yeah.
you create a feedback loop
Okay.
that helps you optimize not just your system,
Okay.
but your whole trading process.
So it's not just about tweaking the parameters.
No, it's about
your workflow.
It's about streamlining your workflow.
Identifying inefficiencies.
Yes, exactly.
It's about
making sure your energy is focused.
Yeah, making sure you're spending your time on the things that matter.
A well-designed performance report can show you those bottlenecks in your process.
Okay. So
maybe you're spending too much time on something.
That's not actually moving the needle.
That's not actually.
Or maybe there's a part of your system that's not contributing as much as you thought.
Those insights can be game changers.
It frees up mental bandwidth.
Yes.
To focus on the things that are actually driving performance.
Exactly.
Love it. Okay, so we've got accountability. We've got justification. We've got optimization. Any other reasons?
One final reason.
Okay.
I think is crucial. Hit me.
Especially in the long run.
Okay.
Documentation.
Documentation. The oft-neglected. But utterly essential. Practice of documenting our journey.
Why is it so important?
Yeah, why? Why is this so important in trading?
Well, by creating these reports, over time, you're building a historical record of your system's evolution.
Of how it's changed, how it's evolved.
You can track its performance through different cycles.
Different market cycles.
You can see how it's adapted to changing conditions. You can even learn from your past mistakes.
It's like having a trading journal on steroids. Right. And that documentation can be so valuable. For so many reasons. Like what?
Well, for starters,
Yeah.
it can help you avoid repeating those mistakes.
Oh, right. Of course.
Remember that time you traded that pattern and it blew up your account?
Painful memories, but valuable lessons.
It's documented.
Okay.
So you're less likely...
So likely to make the same mistake twice.
Right.
And it's like pattern recognition is so key in trading.
Pattern recognition is key.
And what better way to train your pattern spotting abilities than by having this
record,
a detailed record
of your past
successes and failures.
Exactly. Plus, this historical data is a goldmine for future development.
Okay.
If you decide to,
refine your current system,
create a new one. Or even pass on your knowledge.
Yeah, if you're
to someone else.
Mentoring someone.
To someone else, that record is invaluable.
It's like a roadmap, right?
Like a roadmap.
It's guiding you through the markets.
Guiding you.
Okay, so to recap,
Mm-hmm.
we've got accountability, we've got justification, optimization, and documentation.
4 powerful reasons.
Powerful reasons why this is all so important.
For taking this approach?
It's about taking a data-driven approach.
Data-driven, analytical.
That elevates your trading.
To the next level.
To the next level. It's about continuous learning.
Continuous learning, improvement.
For your system and yourself as a trader.
Exactly.
It's about understanding the why.
So why?
Behind the what and the how.
The what and the how.
And it's about embracing the power of data.
Yeah, to make
smarter decisions.
Smarter decisions.
And get better results.
Couldn't have said it better myself.
Okay, so we've covered the why. But I think it's time to address the elephant in the room. Remember how we were talking about
audience awareness?
Audience awareness.
Yeah.
Before? You need to tailor your presentation to who you're talking to.
You gotta meet them where they are.
Right.
Speak their language.
Speak their language. Sure. Focus on what matters to them.
The audio transcripts.
Yeah. We were working with, they never actually say who.
They never say who.
These performance reports are for.
They leave it open-ended.
They leave it totally open-ended.
It's like a choose-your-own-adventure.
Choose-your-own-adventure.
For trading performance presentations.
Which is kind of brilliant, I have to say.
Yeah.
Because it suggests that these principles apply.
They apply.
Regardless of who you're presenting to.
Whether it's yourself.
Yeah, yourself, your team.
Your team, potential investors.
Fundamentals are the same.
Be clear.
Be clear.
Concise, insightful. And be mindful
of what matters to them.
What matters to them.
Exactly. Yeah. But that fact that they don't specify an audience, it got me thinking.
Yeah.
What if the most important audience is ourselves?
That's a profound thought.
What if the goal of all this monitoring and reporting is to deepen our own understanding of our trading, to hold ourselves accountable, to create a legacy of knowledge that we can draw on for years to come?
It's like building a personal trading encyclopedia.
Exactly.
Filled with insights and lessons learned.
And a record of our evolution.
Yes.
As traders. It's about using data not just to improve our systems,
but to improve
ourselves. To become more disciplined.
More analytical.
More aware.
More aware of our strengths and weaknesses.
It's about embracing the journey.
The journey of continuous learning.
That's a beautiful thought to carry with us as we wrap up this part of the deep dive.
And a perfect segue
into the next part.
Where we'll explore some practical strategies.
For putting all this into action.
Exactly.
Don't go anywhere. We'll be right back. Welcome back to the deep dive. We've explored the what, the how, and the why of monitoring and presenting trading system performance. Now, let's get practical. How do we actually apply all this?
That's the question, right?
Yeah, to our own trading.
And the source material actually gives us some concrete steps.
Okay, good.
To get started.
I'm ready.
Okay.
To roll up my sleeves.
Right.
And get to work.
Let's do it.
Where do we begin?
The first step is to define your goals.
Define our goals.
Okay.
What are you hoping to achieve?
Yeah.
By monitoring and presenting your system's performance.
Okay. So, what's the point?
Yeah, are you trying to,
attract investors. Yeah.
Optimize your process.
Optimize my process.
Okay.
Maybe just hold yourself accountable.
Make sure I'm actually doing what I said I'd do.
Exactly.
It's like anything else. If you don't know where you're going,
right,
any road will get you there.
Yeah.
You've got to have a destination.
You need a destination.
Okay, so we've defined our goals.
Okay.
What's next?
Then you've got to choose the right tools here.
The right tools.
Okay. There are a ton of programs and platforms out there specifically for,
for trading system development.
Yeah, for tracking performance.
It can be kind of overwhelming, I bet.
It can be overwhelming.
To sort through all that.
Sort through it all.
Do you have any favorites?
Well, I'm always hesitant to recommend specific products.
Right, of course.
Because everyone's needs are so different.
Everyone's got their own thing.
But I will say, look for a platform that lets you track all the metrics we've discussed.
Okay.
Generate visually appealing reports.
Right, it's got to look good.
Yeah, and be customizable.
So I can tailor it to my needs.
Exactly. So flexibility is key.
Flexibility is key.
Don't be afraid to experiment.
Right.
Until you find one that fits your workflow.
It's about finding a tool that empowers you.
Exactly.
And not one that's a chore to use.
Right. You don't want to be fighting with your tools.
Okay, so we've set our goals. We've chosen our tools. Now what?
Now it's time to create your templates.
Our templates?
Yeah, your monitoring and reporting templates.
Okay.
Think back to everything we've learned.
Right.
The metrics, the benchmarking techniques.
Benchmarking? Yeah.
The presentation strategies.
Presentation, yeah.
Now you synthesize it all.
Put it all together.
To a system that works for you.
It's like building a puzzle.
Yeah.
Right? You've got all the pieces.
Right. Now you just...
You got to assemble them.
Assemble them.
Into the picture.
Into the picture.
Okay.
Don't be afraid to iterate.
Iterate.
Yeah, start basic.
Yeah.
And then refine it.
Refine it as you go.
As you gain experience.
Right. That continuous improvement.
Continuous improvement.
Mindset.
Yeah.
Okay, templates are done.
Okay.
Next step.
The next step, actually use them.
Oh, right, of course. Don't just make them and forget about them.
Don't just make them and forget about them.
Got to actually use them.
Make it a habit. To track your performance, generate your reports.
Yeah.
Analyze the results.
Regularly. Yeah. Regularly.
This is not a set it and forget it.
It is not. Consistency is key.
Consistency is key.
Yeah.
I'm a big believer in routines and rituals, especially with trading.
Yes. If you can build these practices into your workflow.
Yeah, make it part of your daily routine.
It becomes so much easier.
To stay on track.
To stay on track.
Right.
I couldn't agree more.
Okay.
Here's a pro tip.
Okay, hit me.
Schedule dedicated time
for
performance review.
Block it out on the calendar.
Block it out.
Make it a meeting with myself.
Maybe it's first thing in the morning.
Okay.
Like the speaker we talked about.
Up with the dawn patrol.
Or maybe it's Sunday evening.
Okay.
When you're planning for the week ahead.
Yeah, that's a good time.
Whatever works for you.
Yeah.
Block out that time.
Okay.
And make it non-negotiable.
Protect that time fiercely.
Yes.
Okay, so you're tracking. You're generating.
Yeah, analyzing.
It's analyzing.
Oh.
What do we do with all these insights?
That's where the real magic happens.
Okay, tell me more.
You've got to look for the patterns, the trends, the anomalies.
Okay.
Are there certain market conditions where your system excels?
Excels or struggles.
Or struggles. Are you getting worse fills than your backtests suggested?
Okay.
Are there hidden risks?
Interesting.
Inefficiencies in your process?
It's like being a detective.
It is.
Right.
You're searching for clues to better performance.
Exactly. And once you've identified those areas for improvement,
then you brainstorm solutions. Maybe it's tweaking a parameter.
Okay.
Adjusting your position sizing.
Okay.
Maybe even overhauling.
Overhauling the whole thing.
The whole process.
Wow. Okay.
It's about being proactive. Using the data. To make informed decisions.
Right.
And I think that's where having that structured reporting system really comes in handy.
It really helps.
Because you have that clear data.
You can see
the big picture.
You can identify those areas.
You can identify.
And then track the impact.
Of any changes.
Any changes you make.
It's like a feedback loop.
Yeah, a feedback loop.
Built right in. And speaking of feedback loops.
Yeah.
Don't forget to share your reports.
Share them. With other people. Like who?
Maybe a trusted mentor.
Okay.
A mentor?
A fellow trader. Even a potential investor.
Oh, okay.
Getting feedback can help you see your blind spots.
Right, because it's easy to get.
It's easy to get.
Stuck in your own head.
Stuck in your own bubble.
Yeah.
Sometimes you need that outside perspective.
You need someone to challenge you.
Yeah. Challenge your assumptions.
Yeah, exactly.
And it's not just about sharing the good stuff.
Right.
Be honest about your struggles. Your mistakes.
The things that didn't go so well. Okay.
That vulnerability can build deeper connections and lead to more valuable feedback.
That's a good point. It's all about embracing the journey. Right.
It is.
The ups, the downs.
The downs.
The lessons learned along the way.
And by documenting it, you create that legacy of knowledge.
It's a beautiful way to wrap things up, really.
It is. Yeah. Ultimately, this is about more than just numbers
and charts.
It's about using data.
Using data to empower ourselves.
To empower yourself.
To make smarter decisions.
To achieve your goals.
To achieve our goals. It's about that continuous
learning,
growth, improvement.
Yeah.
And recognizing that the journey of becoming a successful trader.
It's ongoing.
It's ongoing.
It's a lifelong pursuit.
The lifelong pursuit.
Well said.
To all the listeners out there,
yeah,
keep diving deep.
Keep diving deep.
Keep exploring.
Keep exploring.
Keep striving.
Keep striving.
To be the best traders you can be.
Until next time, happy trading.